Welcome back to Metals and Momentum. My name is Anthony, and I am going to go over some of the articles that I've been writing on Substack. Now, if you hop over to my Substack, that's Metals and Momentum, you can find me there. The last article that I wrote was how banks trick you so they can milk you, and then also the silver up 100% in 2025 and might outperform everything else in 2026. Funny thing about that article right here, since writing my most recent newsletter, that is this one right here, what we're about to actually go over, silver has actually jumped another 30% since writing that article down below about silver. So it's kind of funny how these are starting to play out, but the article that we're actually going to go over here and now is Canadians finance Christmas, groceries, and even Chipotle. There is a number of different things that I'm going to go over in this article. I'm going to leave the investment thought to you to read on your own. We might go over this in another YouTube video later on down the road, but one of the things that we normally do on these like watch list types of videos is go over things like, for example, a trade and investment recap. Then I'm going to show you, this is like the trade and investment recap is actually things that I've done with my own money, and we send out trade notifications to paid Substack subscribers, letting you know exactly what I am doing with my money when I'm doing it. So if you're interested in that, the link's down in the description. Join me on Substack, and you can get access to those trade notifications for just $9 a month. So it's pretty inexpensive, which is a great thing for you if you're just starting. I also know if you're just starting investing and like trying to learn a little bit about investing and trading, then the value vein is the section that you're definitely going to want to pay attention to. We'll go over that, and it's essentially a small little bit of learning that you can just bang through in like 2 minutes. It's going to help you become a better investor and trader. Then to end off this video, we're going to go over the weekly watch list. There's so much more on the paid section of the newsletter. For example, in this newsletter, I'm going over the game plan for 2026. If you're a paid subscriber, you're going to get access to a little bit more in the newsletter. It's actually quite maybe like a 20-minute read or so total, and you're going to get access to things like, for example, in this newsletter, it's going to be the game plan for 2026, but normally we'll review a portfolio a little bit of a longer term perspective, and I'll give you my thoughts on whether right now, based off of technical analysis, is it a buy, a hold, a sell, that kind of thing. And you can use this to make your own decisions. I'm not an investment advisor or anything like that. I'm just a guy on YouTube telling you exactly what he's doing with his money. So, take that with a grain of salt and use it to your education. But one of the things that we've done really, really well this year is making shorter term trades over the span of maybe a couple weeks, a couple months. Sometimes the trade that I'm actually about to review, it took about like 2 months for this to play out or so. And we did very, very well. In total, just the two trades that I'm about to go over with you, we're looking at a gain of about 20%. So we are very much outperforming the S&P 500. And what we're doing is essentially looking for tradable levels and kind of pairing that with long-term investing as well. So you get a mix of both, but right now I think it's super important to be a little bit more nimble in the markets right now. We'll go over the S&P 500 chart in the watch list, so if you're interested, stay tuned for that. But let's hop over to the newsletter now. And if you're following along on the newsletter, you can go to the trade and investment recap. And I'm just going to go over two trade setups that I actually sent out trade notifications about these two stocks. And the first one was Dream Industrial REIT. This is one that we actually sold out of over the past 2 weeks. It was actually this week we moved out of this position. It was actually a very simple setup, and we can kind of go over it right here. Here's the breakdown, but I'm actually going to hop over to TradingView just so we can get a better idea of what was actually happening here. So the thing with Dream Industrial REIT is it was trading in a very large wedge pattern. So we had the high back in, what was this? Let me just get rid of this. This was back in 2021, 2022. Then they started raising interest rates here in Canada. So obviously Dream Industrial REIT is a investment in the real estate sector, so they're very much going to be affected by the rates, and it sold off very hard. Very hard, actually. It just took a straight nosedive, but then we get this like little chop that happened all around here. Basically, we started to trade in a wedge pattern, and basically where the green line here is where it essentially closed on the day yesterday, or this would be Friday. That is a level of support here, and it essentially was trading in this wedge pattern. It actually broke underneath the support, and that's where we're essentially trading to right now. And one of the reasons why we sold out of this position is because we hit that support, but I'll go over this in further detail. So we broke up out of the wedge pattern and actually started to create this little channel here. This was a great little trading pattern, and it was a pretty simple setup. So we get the break up out of the wedge pattern. We were watching this on the newsletter. I said we should pay attention. But we weren't. We were trying to wait until we formed a tradable channel like what we see here. So this was a perfect little setup here. This is where we sent trade notifications out and said, all right, we're going into Dream Industrial REIT. If you're interested in following along, you could do that. It's all on your own decision. Like I don't make any recommendations. I'm just telling you exactly what I'm doing with my own money. We sent the trade notifications out here, and we watched the stock move over, but I wanted to hold on to it a little bit longer because what I was also planning on is holding over a period where we would capture the dividend that Dream Industrial REIT would actually pay out, and also looking for a top up closer to the support line. So this would have been a good exit point, but I said to myself, you know what, the downside is very little, because if we come back and actually touch this end of this bottom portion of our channel, we actually have the support of the wedge pattern underneath it. And it actually did break this. And the reason why I held through here is because if we were to come back down into this section here, we have both the bottom of the channel and the wedge pattern supporting us as well. There'd likely be another bounce off of this section right here. And by that time, we will have held over the period where we could actually collect a 2% dividend for actually holding this trade. So this was actually just like a perfect setup. It was so good. There's just such little downside risk, because worst case scenario would have happened is we break out under the channel, which we actually did. And then we break into the wedge pattern, and I would have essentially sold off the position right here. We would have broke even, because this is about a 2% down move. And what was also underneath here is the 200-day moving average. This is this blue line here. So there is like 3 levels of support. Very minimal downside risk. The risk of it breaking in this section right here, so low. And that's what exactly happened in the next coming days. We went right into the wedge pattern, into that, almost touching the 200-day moving average. That proved to be support. We moved up here, formed a topping tail right here, and then we sent the trade notifications out saying, hey, we're exiting the position, sold the entire position as a whole. And if we use from, it was somewhere around here up to right about there, this was actually that's not a measurement. This was a 5% move. We need an info line. It was a 5% or somewhere around a 5.5% move. It was somewhere around there. So very close to the top of the range. That was just a perfect setup. And this is one of the reasons why you would definitely want to jump up to that paid subscription to the Substack, $9 a month to do that. And you're going to get access to those trade notifications, especially my style. I very much like to wait for that perfect pitch. which we don't make a ton of trades throughout the year, but when we do, we go pretty hard, and we're looking for very simple setups like what we saw on Dream Industrial REIT. Very little downside risk. We held over the period to collect a nice dividend. So in total, we took a 5.5% gain on the actual stock, but then also collected the dividend, which was 2% in that payout. So that was an amazing trade. So good, even though, you know, it's a small gain, but it was one of those things where it's just so simple that it was like, all right, let's like put a decent chunk of money behind this trade. We're not trading with the whole portfolio or anything like that, but we probably put about like 10 or 15% of my portfolio in that trade. So that was an excellent trade. Another big trade that we actually made in 2025 was the EWZ Brazilian Index. Now, if you go back to my Substack, I wrote a couple articles following the EWZ index. When did I first start talking? When did I first start talking about this? This was way back. Let's just scroll. Here we go. September 1st is where I started to really do just like a deep dive into the EWZ index. That was the article that I actually sent out about EWZ, and I said this is an interesting setup, but on December 11th, I actually sold my whole position because of what I was seeing in the charts here, and we actually managed to capture. I think it was we were up 15% on that trade, and that was a significant trading position. I said pretty confident on this one. Let's go a little bit heavier on this position. We actually were able to buy twice, so in total, it was about a 15% gain on this trade, and it was a significant portion of the portfolio. I said I'm willing to risk about 20% of my portfolio back when I was talking about this, and you can go back and read those articles now, which is great. So really cool to see this play out, but I'll go over the trade. So basically it was a couple days back. Let's just go over to the EWZ chart. We saw this massive red candle. This was a 6.5% move to the downside or something like that from here. And it was essentially, there was just some negative news about, I think it was like a politician or something like that, started to gain a little bit more traction, and investors were just a little bit more concerned about the overall EWZ Brazilian market, right? So the market sold off hard, and I was like, this seems like an overreaction to the news, and especially because nothing was actually set in stone. So I was thinking to myself, probably an overreaction. Let's wait a few days, watch it kind of trickle back upward, which is what I was thinking. And then we'll sell off the position, because what I was then seeing is this is a perfectly forming head and shoulders pattern. So a head and shoulders pattern basically works like this. You get one shoulder, you get a larger head, and then another shoulder. And basically, once we started to reach the top of this shoulder right here, but on this side, this is when I sent trade notifications out and said, bearish signal, let's move to the sidelines outside of EWZ. Let's sell off the entire position, because we are up significantly, and we could lose a significant portion of what we have gained. So right in this section right here, December 11th right here, near the top of this channel right here, I said, let's sell out of our position, capture those gains, up 15%, and watch this head and shoulder play out. And boy, did it play out. Normally a head and shoulders pattern would trickle over, and you'd see candles down along the side here, and this would slowly float down. But once we reached just over the top of this section, this first shoulder, we just saw a massive sell-off, like huge gap downward. That was like a 5% gap downward. So the market closed here, the market opened here. And we just started floating downward ever since. So noticing the head and shoulders pattern was so key. So where do I think EWZ is going to end up here? I think this is really interesting. We have this is called the neckline. So whenever we get let me just move this out of the way for a second. Whenever we get a a head and shoulders pattern, you have a point from like here to here. This would be the neckline of the head and shoulders right here, right? So what you would do is you would essentially measure how high that head is from the neckline. So this is a 8 point, let's call this like 5% move upward from the neckline to the tip of the head. And basically we could inverse this. So we want to go 8.5% downward. And this would take us back to where? By that time, it's going to be the 200-day moving average and also the wedge pattern. So this is a complete retrace back to the wedge pattern, and what it looks like that's what's going to play out, because we see a big gap, very bearish signal right here, another gap forming into what is a bear flag. So a bear flag is essentially like, it would go like this. Let me just, where is the parallel channel? Like this. That is a bear flag. That's how a bear flag forms, upward sloping kind of channel right here. Once this breaks, we're going lower, and there is some support on the blue line here, but if the head and shoulders pattern plays out how it normally would, we're probably going to break that blue line and head back to this. And then there would probably be some pretty serious strong support. So we might actually look at entering that trade once again, because by the time we get there, that 200-day moving average is going to touch the tip of the wedge pattern. And we're actually probably going to be, by then the EWZ will be super oversold, and we're actually probably going to experience another bounce there. So that is going to be an interesting setup. But that was the whole reason why we got into this trade, was because we thought we were going to break out of the wedge pattern early and experience this nice little bounce. So it was a little bit of a gamble, but we got in a little bit early here. It was somewhere around, I want to say around this kind of area. We were like, all right, we formed a little bit of a trend line here. We have the area of support. So if it turns around on us, we're going back down just a little bit over to our blue line. We can quickly peel that off if we do turn around and go back in that direction. But I said to myself, our wedge pattern is right here. And I think we actually might break, because there's some really good fundamental information that we were looking at in the article that we were discussing on Substack, and saying, I actually think it could probably break the wedge pattern. So we moved pretty aggressively into EWZ and managed to capture a 15% gain. That and a couple other trades this year, just a couple other trades, led to a 40% increase in our portfolios in 2025. And now that we're essentially at the end of 2025, we can confidently say 40% up on our trades and investments on the year. That is a stellar performance for the year. I'm super pumped about that. And a lot of the things that we did this year just made so much technical sense. And we just bought cheap stocks while they were going up, and using technical analysis to essentially tell us when to get in and when to get out. And we've gone over a couple other trades, like for example NAT in the past videos. Though that was such a great trade, and EWZ is another one that we're adding to the bucket of pretty significant wins this year. So that was absolutely excellent. And of course, we have our long-term holdings in physical gold and silver as well. Physical gold is up tremendously. Silver is up like 130% right now, which is absolutely nuts for 2025. So yeah, we did absolutely stellar. 40% is a amazing gain on the year. So I'm really stoked about that. Let's move over to the value vein. So the value vein again is just the 2-minute kind of lesson on investing or trading, or sometimes it could be, just mindset, how to make yourself a better investor and a better trader. This one is all about the head and shoulders pattern. It's the reason why we were able to exit EWZ in such a perfect fashion, is because we started to recognize the head and shoulder pattern actually play out. So it's here for you a little bit more clearly on the chart. So the head and shoulder pattern is always bearish. Whenever we form the shoulder, the head, and another shoulder that's somewhat symmetrical to each other right here, you're generally going downward once you break that neckline. And the key is once you break the neckline, but you can identify these charts before pretty early on. Like for example, like we saw the head and shoulder pattern play out somewhat right like here, and we were able to exit the trade knowing that, most of the upside is probably captured for the next like couple months or whatever it may be, right? So we have a head and shoulders, but we also have an inverse head and shoulders on this chart as well to show you the difference between a bearish pattern and a bullish pattern. So bullish, you're expecting it to go up. Bearish, you're expecting things to go down, right? So the bearish head and shoulder pattern is exactly that, a head and shoulder pattern. But this is called an inverse head and shoulder pattern. So basically you have a head and shoulder pattern reversed. You have a shoulder upside down, a head upside down, and another shoulder upside down. And you can use the same measurement, but you would be essentially going from the neckline to the head, and you'd want to measure that move, and then you'd start to have a strong guess as to where you would move in terms of the upside. So if this was 10% or so, you have roughly about 10% to the upside once you break out of that neckline. So that is really key to understand, and one of the reasons why we're able to actually capture gains and not just sit through EWZ and watch it like completely crumble, and then our gains just would go from like plus 15% up, or essentially down to 6% or something like that. So recognizing the head and shoulder pattern, so key, and it's one of the reasons why we did so well on EWZ. So let's talk about the weekly watch list. One of the things that I've been discussing in this video and in other videos in the past is silver. Silver is just on fire, and I've measured this move out. So this is the beginning of 2025, right on January 1st, up to the last trading day, which was Friday. We saw 130% move so far in silver this year. And oh my goodness, like look at this chart. It is just the most ridiculous chart you've ever seen. Is this Bitcoin or is this silver, right? Like it's just absolutely insane. I can't believe the performance on precious metals this year has just been crazy. Gold has been in a very similar pattern to silver, but silver being a little bit more vertical in its performance, the movement has been crazy. So I've marked out the all-time high, which is this blue line right here, where you could see once we break up out of that all-time high, it's a pretty aggressive move upward, little kind of breather here, and another leg upward, a little bit of a breather. We've really only been pausing and like taking a breather for like 2, 3, 4 days, and then we're getting more movements to the upside. We're probably looking a little bit overstretched right now. I would expect a pullback sometime soon. Nothing goes up in a straight line, but I mean, silver is just absolutely insane. And one of the things that I'm mentioning in the newsletter here is silver's up 130%, and it's actually breached all-time highs. And what makes this a difficult chart to analyze is there's no data above where we're at right now. So making any kind of price prediction or like short-term tradable kind of thing is almost impossible because there's no data where we're at right now. I don't think silver is going to go to like $500 in like the near term or anything like that. I think we could probably reach, silver is actually above 90 Canadian right now, and in American dollars, that would equate to $67. So I think we could probably go to 70, 75 very quickly. in silver, which would equate to somewhere around $110 per ounce in Canadian dollars. It's pretty wild to think about, because I've been talking about silver since $18. And I was telling people, it doesn't make sense at this price point. 18 to like 30, that's where majority of my silver holdings were purchased. And to say that, silver today is at $90 is pretty wild. And I think the next move could take us to 110 Canadian. And then I would be very cautious. And one of the reasons why I think that, you should be pretty cautious on silver is we'd be somewhat into 2026 at this point in time. And the S&P 500 is looking like it's going to roll over. And silver is a very industrial metal. So when broad markets sell off, silver will generally sell off pretty aggressively as well. Silver's a very small market as well. So when silver moves, it moves, like it really moves. And we've seen that happen and play out over 2025. But it also works in reverse. When it goes up dramatically. And when it goes down, it also goes down dramatically. So I don't necessarily think that, 50, 40, 30, I don't think we're going back to $30 American on silver anytime soon. In a broad market sell-off, like it could happen, but it's probably unlikely if we don't get that big sell-off in the S&P 500. I think the upside in gold is probably about another $1,000, and if gold gets there, then silver will probably climb along with it, assuming we don't have that broad market sell-off. And when we go into a recession, if there's not like an extreme amount of money printing, then silver is probably not going to do all that well, because it's an industrial metal, but it's also an investment grade asset as well. Like, people will hold silver as an investment. And I think if everybody's terrified and like the world is collapsing, essentially, like the whole market is just dropping down, then I think silver will get hit as well. So just a little bit of caution on silver. There could be some more upside in the near future, but ultimately it's pretty tough to make any kind of prediction on silver right now, because we've never been here. Ultimately, I do think silver is probably going to one day break over $150, like easily in Canadian dollars, that's for sure. Silver is just absolutely nuts in Canadian dollars, but that's going to be a little bit of a longer term perspective. And you just have to take that with a little bit of a grain of salt. One of the things that I am looking at for 2026, wow, I have to get used to saying 2026, is oil stocks. Now, oil stocks are very interesting. One, they're super cheap. They're paying huge dividends. But the thing with oil is, in a recession, oil definitely takes a nosedive. Right now, we're about $53 a barrel, which is kind of interesting because oil is so cheap, but gold is so high. And I just don't understand really what's going on with oil. But when I'm looking at the stocks, I'm going, man, these look cheap. So I'm looking at the CNQ chart. This is Canadian Natural Resources Limited. This isn't a stock I'm rushing in to buy like right now, but it's one of those stocks that I'm thinking about like, wow, this looks really cheap, but the chart is not quite where I want it to be. So here is the chart. This is like, takes you back to the beginning of 2025, really. There is a wedge pattern that actually is playing out here. We've broken up outside of the wedge pattern. I did miss this little break here, but then I did notice the topping tail form right up here. This is a huge topping tail, and that is a bearish signal. And not only did we try and we dipped back below, tried to make a break above that, didn't happen, formed even more topping tails. There's like 3 in there. And then, of course, that signals a lower move coming. We got that, and here we are. This is a little bit of a bear flag. We just went over that on the other chart that we were looking at, EWZ. This is a bear flag. We're probably going a little bit lower here, but really this is all going to come down to what's going to happen with oil. So this is a chart of US oil prices, right, per barrel essentially. So we're looking at $56 right here, and multiple areas of support are broken. For example, I thought this was a good area of support. There's lots of kind of points where we're coming down, touching it, and breaking above. I said, okay, let's pay attention to that. Broke above, came back down, couldn't make it happen, and now we went to an even lower level. Said, okay, if we break here, then we're probably going lower. And here we are breaking there again and forming the next point of support, which is right here. Oil, the price per barrel of oil is just not looking good. And this is one of the reasons why I'm a little bit hesitant to jump into C&Q right now, is because since we have broken underneath this blue line, that means we're probably going to maybe like 50, which is down here. And that's going to take a lot of the other oil stocks down with it, including the Canadian oil stocks as well, because everything is all about the US dollar price of oil. The other stock that I'm very interested in is BBU. So BBU is part of our Mark Carney stock list. If you go back on my Substack, you can go over this article where we're essentially talking about like how Mark Carney is going to rig taxpayer money and put it into his own investments. And BBU is definitely one of those stocks that I've narrowed down that is a core holding of the Mark Carney stock list. BBU is one I'm watching, but there's some things that are happening right now that is just not super great. We need to really clear out of this resistance zone here to be a little bit more bullish on BBU, but the chart's not looking terrible. We do have a bull flag here, so this is actually a good signal, signaling that if this breaks, then we are going to make an attempt to clear this area right here. We need to break out of this bull flag and come up, get through the resistance zone, and it needs to clear this area in order for the next move upward to take place. We have some major support here, so if we do break a lower into this through this bull flag and the bull flag actually fails, very bearish signal on this. If that happens, we're probably going back down to tap major support, and there is a big gap right here that I'm looking. I thought that, we were going to fill this gap back here. Didn't quite fill the entire gap, but if this breaks, then we're definitely coming back closer to 40.64, and then I might be a pretty significant buyer, and I will add this into my list of stocks going into 2026. Right now, I'm not going to show you the game plan for 2026 because this is behind a paywall, but I will tell you that BBU is roughly about 5% of my portfolio right now, and I'm pretty comfortable with that. I would consider adding a little bit more. Pays a good dividend. The stocks are actually very, very cheap, and essentially the Prime Minister is essentially rigging the taxpayer money to flow into Brookfield Asset Management. So that's kind of why I'm a little bit more bullish on BBU. I think if a majority of companies don't do that well in Canada, I think BBU will be one of those that actually does pretty well. And it's looking like that is how it's playing out in Canada, unfortunately. So that is where I'm going to wrap up the free version of Metals and Momentum. There is a paid tier. You get access to my game plan for 2026, and you can go back to other newsletters and look through my stoplight stock section. This is essentially a little bit of a longer term portfolio, but I'm still using technical analysis to help me either accumulate or pause or just sell off the entire position as well. But I'm taking a little bit of a longer field of view on those positions, so you can go back to some of the older newsletters and actually read through that. But that is where I'm going to leave this. $9 a month if you want to join the paid tier of my Substack newsletter. I'll leave it down in the description. But that's all for me for now. So thanks so much for listening. My name is Anthony, and I'll see you in the next one.